On Business Incorporated today, deposit banks commence issuance of redesigned Naira notes in Nigeria. Bank, U.S. Bank signed $500 million MOU to boost investment on Africa aviation. And we bring you updates on agreements and conversations at the ongoing U.S. Africa Summit in Washington, D.C. Good afternoon. Welcome to the Thursday edition of Business Incorporated here on Channels Television. I'm Ini John Mekwa. Let's get it started as usual with market numbers. Major African markets traded mostly positive at intraday. There we see it's just the JSE that was in the negative. Nigeria is still doing positive from its close of yesterday. Thankfully, it's regained the 49,000 level, and we do hope it stays there to the close of trade. JSE of South Africa is down 1.65% at 73,068.31. We look at other parts on the continent now. Egypt is also in the positive, 0.44%, while Kenya closed yesterday 0.31% at 128.21. From there, we move to the Middle East now, where the stock markets there were squarely mixed at intraday. That's what we see in the United Arab Emirates. Both the Abu Dhabi and Dubai market were in the positive. There you see it's Abu Dhabi 1.11% at 10,168.33. Dubai also in the positive, 3,315.23 at 0.13%. Looking at other parts there, Saudi Arabia in the red, 0.326%. Qatar consistently in the red. Football going there, the World Cup going there doesn't seem to be favoring the markets at all. Now let's move to Berlin. A day after the United States Federal Reserve announced yet another interest rate hike, the European Central Bank looks to follow suit with a 0.5 percentage point rise. It's the latest attempt to curb inflation, which has been soaring across the Eurozone for some months now. Now let's bring in Kate Ferguson to give us details. Hi, Kate. Good afternoon. So the European Central Bank has already raised rates several times as other countries this year in an attempt to curb inflation. Is there any evidence that the policy is actually taming this inflation?
Well, inflation has dropped very slightly in the Eurozone, but it would be wildly untrue to say that the problem is solved. If you look at the data from November, consumers here in Europe were still paying 10% more for everyday goods and services than they were a year before. Now, the philosophy behind raising rates, of course, is that if people have to pay more to, for example, get a car loan or a mortgage, they'll be less inclined to pay high prices for other goods and services. And that reduction in demand would then lead to a drop in prices. But this is based on a very particular assumption about people's borrowing habits, and it completely ignores all the other major factors that are driving prices up, like supply chain shortages due to the pandemic or the energy crisis caused by Russia's war in Ukraine. Despite all that, though, central banks are pursuing this policy very relentlessly. The ECB has never before raised interest rates at such a rapid pace. And in fact, it hadn't raised rates at all since the financial crisis. It is a really tricky balancing act, though, because the Eurozone economy is on the brink of a recession, and making borrowing prohibitively expensive could cause a further slowdown. In general, central banks are aiming for 2% inflation. That's the figure they think reflects healthy momentum in an economy. But when you look at the current rates, we are still really far away from that.
Yeah, very far away from the ideal we see there, Kate. But how does this affect emerging markets, especially because they trade a whole lot with Europe?
So when a major advanced economy like the United States, for example, makes it more expensive to borrow, a couple of things happen. For one, it strengthens the value of the dollar because investors want to buy American debt because they'll get better returns on it. A strong dollar, in turn, makes imports more expensive for emerging economies because their currency can now buy less in dollars than it could before. It also leads to inflation because key commodities like raw materials, for example, they tend to be purchased in dollars. On the other hand, it does make exports cheaper and hence more competitive. So that's a bit of a silver lining there. The other big issue is that it can lead to a debt crisis. So many emerging economies hold their debt in dollars, and the stronger the currency becomes, the less able they are to meet repayments, and that puts them at risk of default. This actually happened in 2021 when Zambia became the first country to officially default on its debt in the aftermath of the pandemic. So with all these issues at play, it's perhaps no surprise that the World Bank has downgraded growth forecasts for emerging markets this year from over 6% to 4.6%.
Yeah, well, and this obviously is not far away from response from the markets.
So investors tend to price in their expectations of rate hikes. So what really tends to move the markets following the announcement is the tone of the remark. So Federal Reserve Chair Jerome Powell, he stressed that the 7 rate hikes so far this year have not yet really had a noticeable effect. And that, of course, implies that further rates are on the cards, further rate hikes, I should say. And this really caused some jitters because it implies that policymakers are really expecting this high inflationary environment to be problematic for the foreseeable future. Around 70% of the stocks in the S&P 500 closed lower on Wednesday, and it was tech companies, banks and retailers that were the biggest losers. Asian shares then also fell following the declines on Wall Street. So really, when it comes to the policy decisions by the European Central Bank and the Bank of England, it will be a similar story. Investors are expecting a 0.5 percentage point hike, but what they really care about is where this is all going. Are central bankers in Europe going to continue this policy, even if it means pushing economies into recession?
Yeah, well, choosing between the devil and the deep blue sea is what the central banks have to do. Thank you so much, Kate. Okay, so move on now. Asia-Pacific markets mostly traded lower after the U.S. Federal Reserve raised its benchmark interest rate by 50 basis points to its highest level in 15 years. So looking at the number now, the Nikkei 225 in the red, 0.37% at 28,051.70. Shanghai Composite also in the red, 0.25% at 3,168.65, while the Hang Seng Index follows suit, but takes the red even deeper there at 1.55% at 19,368.59. Now in Japan, it traded lower also as investors digest trade data from Japan and South Korea. The Kospi also fell at 1.6%, as you can see there, and the AX 200 of Australia also in the red, 0.64% at the close of trade. In the United States, stock futures were sharply lower. This is the controller of the world market, and of course, because of that Federal Reserve latest policy update, futures tied to the Dow Jones Industrial Average fell 240 points. That's about 0.7%. S&P 500 futures there, the Dow Jones 0.7%, S&P 500 almost 1%, 0.99%. Nasdaq futures also in the red, more than 1%, 1.33% at 11,711.50. Well, Tesla shares fell more than 2% in the pre-market after the chief executive officer, Elon Musk, sold a chunk of its stake in the company. Well, a whole lot is happening around Elon Musk and Twitter these days. In the oil space now, oil prices were kept in check on Thursday as the dollar firmed, while the possibility of further increases to interest rates by global central banks also heightened demand concerns. Brent crude futures rose 38 cents to $83.08 a barrel. U.S. crude futures gained 28 cents to $77.56 a barrel. Both contracts fell as the dollar gained a stronger on weakened oil demand because it makes the commodity more expensive for those holding other currencies. Federal Reserve Chair Jerome Powell had said that the U.S. Central Bank will raise interest rates further next year, even as the economy slips into a possible recession. Chinese economic data for November, which was much lower than expected, further darkened the demand outlook. The metals market now, gold rate was trading lower on Thursday, while silver rates sank on 2.17% on multi-commodity exchange. Gold February futures were trading at 54,310 per 10 grams, while silver March futures were trading down by 1,502 at 67,800 per kilogram. Globally, the yellow metal traded lower as the U.S. Fed signaled further rate hikes if inflation doesn't cool, since the U.S. economy is slipping towards possible inflation. And gold and silver prices are trading steady after witnessing a sharp rally witnessed in the past few sessions. Market participants were trading cautiously ahead of that Fed policy statement, which we have already seen. Well, still talking about commodities now. Commodities will be the best performing asset class once again in 2023, heading investors' returns of more than 40%, and that's according to Goldman Sachs Group. The Wall Street Bank said that while the first quarter may be bumpy due to economic weakness in the U.S. and China, scarcities of raw materials from oil to natural gas and metals will boost prices after that. And still staying along that line, Tanzania's mining industry is set for more global exposure after Live Zone Metals, the parent company of locally based Tembo Nickel, is set to list at the New York Stock Exchange after the completion of a series of transactions. The move is expected to position the country's mining industry at the center stage of the world's largest capital market, and this should attract more investment into the sector. However, in the past, international companies such as Barrick, which is also listed at the New York Stock Exchange, and at the Toronto Stock Exchange in Canada, and Glencore, which is also listed at the prestigious stock markets as the London Stock Exchange, the JSE in South Africa, and the Financial Times Stock Exchange, both oversaw the nickel project in Tanzania, but there was little the country could show for it. So we do hope that with this listing on the New York Stock Exchange, it will bring better days for Tanzania and its economy. We do have more stories for you. For instance, inflation for November in Nigeria is out. Is it up? Is it down? Find out after the break. This is Business Incorporated on Channels Television. You're welcome back to watching Business Incorporated here on Channels Television. Nigeria's inflation climbed higher to 21.47% in November, and that's up from 21.09% in October. This is according to the latest reports released about an hour ago by the National Bureau of Statistics. The latest figure, which beats analysts' forecast, marks the 10th consecutive month of rising inflation in the country. The NBS attributed the rise in prices to food supply disruptions, import cost hikes due to currency depreciation, and a rise in production cost. A separate food price index showed inflation at 24.13% last month, compared with 23.72% in October. Some economic analysts had expected the country's inflation to range between 21.33% and 21.5% year-on-year for the period. Meanwhile, the federal government expects inflation to remain in double digits, averaging 17.16% next year. Well, we're still staying in Nigeria now. Today marks the commencement of the new notes in circulation in Nigeria. That's it. This is how 200 Naira looks like in Nigeria from today. The old one will be in circulation and will be legal until the last day in January. Meanwhile, this is the new 200 Naira notes in Nigeria. There you have it. But we do have other pictures there. You see how 1,000 Naira looks like. And this morning, Aniti Edet was out on the street and discovered that over-the-counter 1,000 Naira note had been given out to customers. However, when you go to ATMs, that was this morning, you would still get the old notes. Well, the CBN had in October redesigned all major Naira notes and notified the public that it will start circulation today, the 15th of December. Meanwhile, some bank customers who spoke to Channels Television earlier said that they were yet to receive the redesigned new notes in any of the high denominations.
Within my vicinity, I cannot even receive anyone out of even from the ATM machine, even at the bank. Even this morning, I just stepped out from there. My expectation was to receive at least, even if it is the 200 naira new notes, but I haven't received anything. I just withdraw this morning, and I've not. It's still the old notes that is still being given. And according to what the CBN said, they say it will be in circulation today. So if we are not ready, we are not ready. That is what I would just say. Because if you say something is coming out, and the anticipation of everybody is that the new note should have been in circulation. It shouldn't be a case whereby you get to some bank branches that you will not be able to collect something like that.
I heard that the new note is coming out. I did see it on WhatsApp, people posting it, but I never know the time the thing will come out. So as I come to withdraw money, I'm not expecting it. What I see, I saw. If I see the new note, maybe I will shall say, hey, see the new note. But now that I never see it anyway, anytime that the thing come out is fine.
That's right. Nigerians are looking forward to holding the new notes and spending it. But the old note is still a legal tender in the country until the last day in January 2023. So both will run side by side. Now, moving on to commodities space. Now, cement is a major building material used by construction companies. In the third quarter of this year, the construction sector expanded by 5.52%. However, the price of cement has remained flat at 4,200 per bag. Now, that is strange in a time when we see a fluctuation of price and volatility in almost all commodities. We have Victoria Momo now joining us from Victoria Island. Victoria Momo again from Victoria Island, second time this week, to tell us what she thinks about this. Hi, Victoria. Good afternoon. So what can we say is responsible for this resilience in the price of cement?
Good afternoon, Eden. Thank you for having me. So I'll start by saying that you're right that the price of cement has remained flat, despite the fact that the construction industry, which requires cement as a vital item for construction, expanded in the third quarter. But one important thing to note is that, despite the fact that there was an increase or an expansion in the construction sector, compared to the pre-pandemic level, there was a decline. And this is showing that the construction sector is still recovering from the impact of the pandemic. So the level of activity in the construction sector is still improving, but the demand pressure from the construction sector is not as much to trigger an increase in price of cement. Secondly, there is intense competition in the cement industry, and we are aware that there are major players in the cement industry, and this has also, contributed to the stable price of cement in Nigeria. Not to mention the fact, not to exclude the fact that cement is domestically produced and supplied. So the impact of exchange rate pass-through is not really felt in the price of cement.
All right, so today, incidentally, the second Niger Bridge was opened, even though it's temporal. And we've heard a lot of government efforts in building infrastructure and, upgrading even the existing ones, and the issue of concessioning. What impact do you think this would do to the price of cement or the demand for it as we get into the new year?
Yeah, it is true that the government has, been involved in several projects. There are ongoing projects, road infrastructure that need to be, constructed. And of course, one major item, like I said earlier, is cement that will be needed to do the construction. So if, the demand for cement has increased as a result of the ongoing infrastructure projects, if the demand increases for the ongoing for cement, for the ongoing infrastructure project, we see that the price of cement is likely going to increase in tandem due to the demand, the surge in demand for cement. There are several concessions that have been done. For example, the concession that was concluded. The 12 concessions that was concluded on federal highways. And this is going to include private companies that are capable investing in road infrastructure. So when we see more of these concessions and more of infrastructure development, we would see a large demand in cement, and this is positive for cement companies.
All right, thank you so much, Victoria Momo. We'll certainly look forward to more demand because it will mean more infrastructure for the country and better economic activities. All right, let's head to the United States now. At the U.S. Africa Summit, a whole lot is happening there. The latest is that the United States hosted its much anticipated U.S. Africa Business Forum. And it came to an end with a deal room, the complete of a deal room where more than $15 billion worth of new trade and investment partnership were announced throughout the day. President Biden capped the event with several announcements, including significant new government loans and grants for African projects and enhanced cooperation with the fledgling African Continental Free Trade Area. All right, and the African Export-Import Bank, that's Afrexim Bank, and the United States Exim Bank have signed a $500 million MOU to boost trade and investments, especially to help revive and strengthen African airlines through refleeting. Afrexim Bank President Benedict Orama has promised that the platform and relationship will be used to promote the creation of regional supply chains by supporting transportation, rail and road infrastructure, healthcare, and renewable energy. It's also for the promotion of the AFCFTA. AFCFTA getting a whole lot of attention at this time. And a private Algerian company has announced the export of 120 tons of building materials to Libya after the country's authority announced achieving self-sufficiency in the materials. The director of the retail building materials company in the state of Constantine, Islam Thebe, said that this shipment consists of 85 tons of adhesive cement, 35 tons of joint paste, noting that this operation aims to enter new international markets. This commercial deal was concluded with the Libyan partner at a value of 21,000 euros, according to the official in a statement, stressing that another order of the same quantity will be supplied to the same Libyan partner in the coming days. Good times there for the building industry of Algeria, and we do hope it extends to other countries on the continent. That's where we draw the curtains on Business Incorporated for today, Thursday. Thank you so much for being a part of it. We have a final one tomorrow. I'm John Mekwa. Enjoy the rest of your day.